Monday, 29th of April. This is the week ahead, brought to you by Financial Juice, a fantastic squawk service, and Earn to Trade, the best futures funded trader platform. Let's get into it. So, big volatile week ahead. Nothing really going on today, Monday, 29th of April. We had German CPIs coming out, a bit of a miss here today, 0.5 on zero point 0.6, prior 0.4. But the big stuff really is, well, let's just focus really on Wednesday. So, I mean, we do have CB consumer confidence tomorrow out of the US, Eurozone CPIs set to come out. Eurozone CPIs 2.4 in line with the prior. German GDP as well tomorrow set to come in a little bit of a beat on the prior, negative 0.3. But really Wednesday, German Labor Day on Wednesday, but not for the rest of the world because we're going to have quite a lot. ADP non-farm employment Q1, manufacturing PMIs, ISM manufacturing PMIs, JOLTS crude oil. But the big focus, one of the two big focuses this week is the FOMC statement and interest rate decision, and the press conference at 7:30 as per usual. We're not obviously expecting any change from the current 5.25 to 5.5. Currently, interest rates in the US are at the Fed rate is at 5.33. Really, the focus, as I talked about in the VWAP report, the focus is going to be in the minutia of where is the Fed looking at now. The journalists are going to try and call out Jerome on what he's going to be essentially. Well, he and the FOMC crew are focusing on. When it comes to, are they going to cut? Are they going to hike? Are they just going to do nothing? So the usual fare, and might not be that interesting unless we do get some sort of light out of Jerome as to what they're thinking. But yeah, the Q&A is always really the best and most informational part of these FOMC events. Bar a change in the rate. And then Thursday, initial jobless claims set to come out 212, prior 207. These jobless claims have been nice and weak. And I think even if you have a small bit of strength come in on these jobless figures, it's not that big of a deal. It's actually going to feed into the Fed being a bit more accommodative, i.e. a cut. And then Friday, little data point known as NFP. So jobs, non-farm payroll set to come in just quite a bit lower than the prior Whopper, which was 303,000, but is set to come in 243, which is current consensus on the street. And then no one's really going to care about the services PMI at that point. But we've had a really good beat on the prior NFP, and the markets have kind of bounced on that. I mean, we've had pretty tough week last week. I suppose you couldn't say really the markets have bounced on a really good NFP, but they did last month. So, really it's very hard to forecast and kind of pick levels on a Sunday night, Monday, on a week like this, given we're going to have a huge amount of volatility. So, let's get into a couple of things that I'm going to cover. I'm really cutting back on the amount of news stories that I want to cover, unless there's something really interesting that not everybody else is covering. So we have the weekly VWAP report. Volatility Ahoy is this week's title. Earnings set to come out this week from Apple, Amazon, Eli Lilly, MasterCard, I think Coca-Cola, AMD, Lind, McDonald's, Qualcomm, and more. And so you just hit this link here on the VWAP report. It'll take you to the earnings page for this week, where you'll get all the details of these companies, expectations, etc. But yeah, we've got a really busy Wednesday, really busy probably Thursday as a result of the FOMC on the Wednesday night, and then Friday, of course, is going to be highly volatile. All right, really the biggest thing going on in the markets right now is the yen. Well, the yen depreciation against the USD, and it has been through its 34-year low against the dollar. So, we haven't seen the Japanese bank intervene in this steepening of the spread between the yen and the Dixie until this morning. So I'm just going to post a link to this from Nikkei Asia, where I think the Minister for Foreign Affairs was asked when are they going to intervene, and he stayed kind of pretty quiet about what his thoughts were on that. But they have now intervened, and you'll kind of see from the chart here, you're looking at 30-minute bars here. So you're seeing this is dollar to yen, and so when this chart goes up, it means the dollar is strengthening against that yen. But you're seeing here this morning at about 5 a.m. London time, the Bank of Japan coming in here and starting to intervene in this. And, net, what does this really mean? Well, unless you're kind of on a carry trade in yen to dollar, it's not really that important. I mean, obviously it is a significant sign of certain strength in the dollar, but when you're looking at like dollar to euro, it's not that big of a deal, right? So, we have also seen in other spots in the market just a phenomenal story out of China buying phenomenal amounts of gold. So, I would keep an eye out for further strength in gold. Personally, I think the Chinese are done kind of with their purchases of gold for now, and they're probably going to let it try and float back down a little bit. All right. So that's it really for the macro stuff. Let's get over onto the charts here and see what we can see. And so we just switch over here. Yeah, so I'm really going to cover the Dixie, the SPOOs, and gold and oil. Really, I don't want to cover too much here, so just want to keep it quick because of the week that's in it. Okay, so here's dollar. You're looking at VWAP on the year, a bit of volume here that I've identified from when we were back up around here on the Dixie, which was pretty much kind of September 2023 through to kind of November 2023. This kind of whole area just above my head here, around here, right? So just having a look at the volume in this area, and we do have the point of control for that area as being kind of a nice spot for us to look for trades. And then if we kind of, I have been looking for the dollar to come back to YPVAH, which is yearly prior value area high, right? And if we then switch into the 30-minute view, you'll see here I have a monthly VWAP on, right? And you've seen a lovely, lovely opportunity here where we just broke back down inside of this monthly VWAP on the +1. That's just going to attract a lot of selling, and we got a really nice trade last week on that. But then just kind of basically just spent a lot of time just trying to get these incrementally lower lows, making its way ultimately back to monthly VWAP, where there should be buyers to pick this up. However, from selling we would see here, and again here, this would mean not only we get back to monthly VWAP, but then it puts high potential for that pullback here onto that yearly prior value area high. And you did see prior here on when did we do that? That was the 11th of April. Once we popped over that high and pulled back, I mean, just look at the strength that came in there. Just phenomenal stuff. Let's zoom out a wee bit. Well, I don't need to zoom out too much on that, but there you go. From here, that strength that came in there and rallied us quite a bit up, actually, to put in about 1.5% up of a rally from there. So we're kind of coming back down here. I do, weakness that I might see in the dollar on a Monday on a week like this. Could turn, there could be a total change of context and condition by the time we get to FOMC, post FOMC on Thursday, and indeed post NFP on Friday, right? So it's very hard for me to kind of do this forecast the week. So this is where really we're better off, updating our view daily live as things transpire. All right, that's Dixie. Let's look at the SPOOs, the S&P 500 on the futures market here. So, yeah, I mean, rather than looking at the yearly condition here, I really want to look at the quarterly. And so you see, we've come in on this thing, and really, we had quite an uncontrolled auction here in the start to trading down into this prior quarterly value area, right? And so if we kind of push back up onto this spot here, for example, I don't. I see the buyers having a hell of a time here. Basically, I really do. Now, that's one area to get involved to short this thing and kind of trade this down, down, down on the auction to ultimately complete down at 48. Say call it 4840s, 4800s. Quite a couple of people on the street calling for 4800s. I mean, I don't really listen to them, and I don't understand what their edge is. I mean, I understand what this edge is and why this tells me 4800, but whatever. Yeah, like I think if we bust a groove over the quarterly prior value area high here, and even if you start to see this baselining, I think it could make a rally for the 52.46 and the quarterly plus one, and that would be just too expensive, kind of mathematically wise. I think for this market, if we get up here in a hurry, that would just be like way too expensive. I think for the market, and we would have to fade that level back down somewhat from there. But all things considered, the market is rotational down on this quarterly area. Should we push to the QPVAH? I'm looking for sellers to come involved there, and I may get involved there. I would rather shoot my gun, as I said in the VWAP report, I would rather shoot my gun when everyone else has shot at each other and, there's only like a few people, scraggly people still standing, let the market play out. All the narratives it wants to, and then when the market just kind of takes a breather, just take a trade. So that would be pretty much putting me taking a trade probably a half an hour after the open on Friday. And maybe that involves fading strength. Maybe it involves staying away from strength. Who knows? But technically, if we didn't have FOMC and we didn't have NFP this week, here we are in the 30 minutes. We're looking at a monthly VWAP here, right, on this. So this is a monthly prior value area low right here. You saw a test there last Wednesday, sold down. See, pull back, or pull down, then pull back for a test here at what was that, like a half one, and had half two on the open, and then we just sold down to put in new lows on the week at that point, and then picking up buyers at that all-time high back adjusted 31s, and then rallied up again. You saw a little bit of first touch excess over the monthly area and then held here. This is called time acceptance at the level. So this is indicative that we will make our way above and continue. With the opposite of this is essentially this here, where you make a quick lick onto it and the market just can't hold it down, she goes. Whereas here, we made a quick lick up into here, a quick lick, I should say, up into here, market rejected, but then hung around like a bad smell for the rest of that session. Well, it was through APAC, quite weak selling, came in there, and then once we had the US Open, we were back up into this area. So I see not selling at the monthly VWAP. It's a very hard area to get tight risk on, especially when we creep our way up into it in this slow, controlled way. You want the fast moves into it, to fade that, But yeah, look, I think if we have a move to the QPVH, was it 5180s? I'd be looking for weakness here, and then maybe fade that thing back down and keep going down on the quarterly auction period. So read the VWAP report if you want a little more detail on that one. All right, gold. Let's look at gold. I will update the description in this video on YouTube with that article from the FT on the massive amount of gold buying by China. But yeah, with gold here, look, I think we're back inside this kind of yearly +1, and that really is probably going to attract sellers to drive down from here. So if we ultimately, I'd be looking for it back down to yearly +1. Now this is dynamically moving this level, so currently it's at 2282s. So then if we ultimately, I'm like trying to get short somewhere here to then take this move back down and just maybe take a little piece out of that move. I don't want to position trade and be a dick for a tick and try and nail that whole move. I just want a couple of little chunks out of the middle. Just one. I'm not greedy. Just one. I just want one little chunk of that. Down she comes. But for now, I think it's way too early in the week. So what I'd love to see would be a test on the monthly VWAP, right? Monthly VWAP up here. Let's call it around 2373s right now at market. It's confluent with the resistance point here as well. I'd like to fade any strength into this level and then try and get this to move back down here. And so really, I just want, a little chunk out of some of this, just chunk here, chunk there, you know, I'm going to be using, a couple of other sharper tools to help me get tight risk on that trade. But that's what I'm looking for. Strength. I don't really see anywhere decent where I could put on a long on gold, to be honest, at the moment. So yeah, look, maybe on the yearly plus one we trade down there, but that's a world away at the moment, right? That's gold. You're probably understanding this is all very technical as opposed to macro fundamental sort of trading that we're looking at here, right? We just drop everything here and we'll look at the year. So we're seeing oil really holding on that yearly. Actually, I'm going to delete a couple of these trends here. These are pretty useless at the moment. Well, we'll leave this compression area. Yeah, so you're seeing oil. If we, here's the shape of it on the daily, right? And we've just not been able to hold very well above the YPVAH right now, as you can see on oil on the daily. What I always see is that when the market dips into any of these yearly levels, like the half, the 1, the 1.5, once it's kind of dipped in there and you're looking at it like in one or two auctions after that, and the market has not hit a significant upper resistance, that market is going to have buyers, buyers, buyers all the way. And so then if we kind of take that and translate it over here onto monthly VWAP on oil, WTI oil, the M24 contract. So just tidy this up a little bit here. You can see that Y plus one here. Look at that this morning. Look at that. We were below here since we rolled onto June. We were below, and you just see sellers, and then we managed to put in some time acceptance, and then we have buyers, right, above the YPVAH, and then we dip into that plus one, and you see this morning in APAC buyers. All right, so what does that tell me? It tells me that we are most likely going to test here now the monthly VWAP. And, given the macro is moving here and there between Israel going for a second offensive against Iran versus not, it's very, very hard to see where this is fundamentally going to go over the next, $10, for example. So all I can see is quite a bit of size on 84's whole handle, and that's quite common to see that. Technically we are holding on the monthly -1 after being below. So that sort of me is a pattern shift back to the local VWAP and potentially further up. All right. So, but this makes it really difficult because we're between a rock and a hard place. With the rock is the support of the monthly +1 or -1, and the hard place is the yearly PVAH, right, back down below here. So remember what it was like when we were below this level, right? Could go either way. And I really wish I had something a bit more tangible for you on oil at the moment, but I'm just going to be completely honest with you. I'm going to be trading this really, really, really technically. I'm just going to be kind of mainly looking at like my weekly VWAP, my monthly VWAP. I mean, we could put on the weekly VWAP, and that we had great trade on that, like over the last couple of weeks. But you're seeing now we're kind of caught in the weekly VWAP. But this is a smaller time frame compared to the monthly and the yearly, of course. So I personally, and I put this out in the VWAP report, I think we're weak on oil until we get another catalyst to drive us here. That's kind of as simple as I think I'd like to keep. And then just shoot at something that looks more like a decent trade, probably later on in the week. Okay, that's all I got for you on oil. And I think what else to be aware of where the yearly +1.5 85.25s is. I think we push into there. It could invite selling. And albeit, this yearly plus one, great support. However, should this breach, we are going to be moving down. And how I'd like to sell that actually is essentially on here. I'd like to let it breach and then close the day below the Y plus one. And then the following day, look for a bid up to try and get out of it, and then sell that either at the YPVAH or indeed against that Y plus one, wherever it is, 30 minutes before the open on the pit. So that's kind of how I would trade that, right? So if we breach below, I'm not going to be initiating shorts. I'm going to be waiting for the next day, look for the buyers to come and get tired, and then sell. So yeah, listen, be safe out there, keep it tight, don't blow all your load. Monday, Tuesday, Wednesday, Thursday, Friday is going to be the better days to be looking at these markets to put on a bit of risk. All right, keep it tight and have a good one. Cheers.